He's with me at Post 9. Welcome back.
Thanks.
I noticed from your notes, it seems like you're getting a little more defensive. You upgraded utilities to overweight, staples to equal weight, and you downgraded discretionary. Have I characterized that correctly?
I'm just trying to position for what I think is inevitable, which is either you benefit from AI, you can't be destroyed by AI, or I don't know, right? And so I'm starting to realize, like, all right, I know I'm going to need utilities, I'm going to need staples. So maybe those are just going to trade at higher multiples than I thought previously, and I don't want to get too negative on them.
Wait a minute. So you are making market calls, broad market calls at this point?
No, not a market call. Just what I think is going to be.
Calls,
yeah, sector calls, not a broad market call. Yeah.
On AI?
Yes.
Who's going to win? Who's going to disrupt? Who's going to lose?
I think the market multiples are telling you right now who they think is going to win, right? And then there's things that are either going to benefit or not benefit or get destroyed by it. And I think it's that simple. And I think what I've realized in the last 3 or 4 months is, market's not just up because people got dovish on the Fed. Okay, it's up because there's things that are really changing, and AI is actually starting to impact a lot. And so that's part of the reason the market's up, part of the reason growth is up, part of the reason NVIDIA's up. It's not all just speculative garbage. They're selling 25,000 GPUs for ChatGPT 5.
No, I understand that, but people say there's a bubble related to AI. You don't think it's too soon to make broad sector calls right now about that?
It might be. It could be 5 or 10 years out. I just think I've been too negative. I know I'm going to need certain things for long term, and I know the things that I'm confident can't be disrupted by AI. Maybe I should pay a higher multiple than I thought earlier. We've been wrong. We've been too negative on staples, and it's hurt the portfolio. So I'm just trying to, kind of take it to market weight from underweight and say, you know what, there's some reasonable names in here that I could hold that are probably going to remain at elevated multiples.
But what do you think broadly lies ahead for stocks? Here we are at this moment, right after got last week out of the way, which was a critical week. We had Apple and the Fed, obviously. Now we got CPI, PPI, we got companies like Disney. We got the debt ceiling, which maybe we're finally paying attention to here.
I'm a seller of caring about the debt ceiling. Maybe this will be the dumbest thing I say today, but what are the alternatives? They're just going to not pay government employees, and we're going to implement massive austerity, and that's it? No, we're going to raise it, and when we raise it, eventually, the market will go up more that day than it goes down, anticipating it. That's been the playbook the last 97 times we've worried about this. So, shame on me if I get bearish on the market because of that. I really don't know if the next 10% move in the S&P is up or down. I really don't know. I could see arguments for.
Do you have a sense what you think?
I think that consensus and rhetoric is negative, but I think people are worried that it could go up and they're going to miss it. And earnings season's been better than people thought. Numbers have been okay. They cleared the lower bar pretty universally. And there's some signs that there's some signs that inflation's rolling over. You're seeing some consumer companies, cruising data looks good. I mean, you can go down to earnings. It's not a disaster, and it's not what people thought the bear case would look like at the beginning of the year. So I'm kind of more mixed. I don't think you can. We talked about this a million times. You always sound dumber when you're bullish. Right, because if you're bearish, you're debt ceiling, and I don't worry about and most of the things don't matter. What matters is the trajectory of corporate earnings. I think they're eroding but not imploding. Some companies are clearing the lower bar. I think I want to own some growth stocks. I think people are too negative on energy and metals. I know those. I'm going to need those in years 2, 3, 5, 10. So I think I find things that can outperform. I'm not in the bear den, but I'm worried that valuations aren't that compelling and the economy's slowing a little.
And you truly don't care about the debt ceiling issue, even if it gets messy around the deadline and we have a big pullback, you'd be a big buyer of it.
Yes, I would be, because I don't see what the alternative is to them raising it. I mean, in the end of the day, what are they going to do? They're going to just not pay the government employees, and there'll be some Washington stuff like there always is, but at the end, they're going to raise it. So I'm going to the bottom. I'm doing this on the iPad and going to the bottom. Oh, they raise it. Okay. I don't know what the craziness in the interim will be. But I don't believe that they're going to implement massive austerity and run at a balanced budget, or.
Okay. So you're reasonably measured about the market overall. Yeah.